This is the only way possibly I think one may make aware of the government. This is what they have done, the greatest, in fact, injustice to the honest taxpayer. Otherwise, they have no intention to bring all the cash credits and everything under the maximum rate of 60% is concerned. Of course, we do have certain example like that 111A. When they amended that, they put the section it will applicable from the particular date is concerned. That is, they say that but it is not so here. Now the Settlement Commission also, when they amended that all those who not able to pass the order, they say that the entire proceeding became abate. Matter went to Bombay Court and Supreme Court also upheld. They said all right. To that extent, we may strike down. Possibly, one may try. To some extent, it may be strike down. Like that the Vatica Township, that is 367 ITR, that is when the amendment came on the issue of your surcharge, department took the stand from the retrospective. Ultimately, court took the stand that no, it is only from particular date concerned. So therefore, my view could be it is arbitrary, it is retrospective, and no rational. Penalty cannot be levied with respect to the transaction taken prior to the proposed bill. No accountability on the part of the taxing officer, and discretion related to misuse. Therefore, this may be strike down to at least to some you may get on this aspect is concerned. Now that the checkered issue, many times question has been asked. All right, I have deposited the cash in number of days. First I deposited 50,000, second I deposited 40,000, third day 50,000. Can the department ask us, no, you have the information, or you have deposited different date? There are series of judgment on this when the earlier the 78, when the demolition this issue came, they said that you have no business to ask what note I have kept it. As long as my books of account show that this was the cash balance, you may deposit 100 times. No officer can ask you that why you have deposited different time. And therefore, all these case laws I have made reference to only to show you that anything that something comes, so you may be able to rely on all these case laws. You want to courts have gone to this extent concerned, you need not give the record also. As long as on the particular day, 9th, you prepare the balance sheet, prepare the cash book, show that you are having the 50 lakh rupee cash in your books of account, and thereafter go on depositing. Nobody can ask you that why you deposited 1 lakh today, 1 lakh second day, 1 lakh third day. So all the ratio laid down by all these concerns. Now with this background, this is nothing but the voluntary disclosure income, complete voluntary disclosure. Unless the next time amendment comes on this, then the rate of tax, I referred it over there, it comes effectively 77.25%. There is no expiry date. Then it is not deposited. Then it ultimately, if you don't deposit 31st March, then the rate will effectively 83.25%. That is what the ultimately will come. Then no deduction is available under this. Then the penalty is there, and if you file in response to that 142, then also that 6% penalty it comes to. Then the scheme applies to all incomes covered under 68, 69 and 69D. For an example, suppose that you have made investment or like immune property. Officer says that is whatever money you spent, that is much more than what you have. So I will make under 69 edition. So according to this, that will be liable tax at 60%. If that is the intention, then of course it applies to, this scheme applies to all SSCs, applies to even section 44 AD and applies to 217 onwards, and of course only restriction is that the under Black Money Act cannot be deducted, cannot be declared. That is the only. Otherwise, everything is covered under this. Of course, search and seizure or limited issue is there. That is, that if any search take place after the particular date, when the bill becomes the act, then the rate will be much higher. Of course, there I think possibly we may not be able to challenge on that. Of course, that is what government intention, they give on the date, from particular date only. So therefore, ultimately it comes almost 167% is concerned. That is how the insertion. Now, one thing is what I find that this new provision is concerned. That is the new provision is concerned like 273A. Like section 270A present penalty, under 273A we can go for waiver. Once you go for waiver, there cannot be any prosecution. Whereas the new act which they are proposing to introduce, it is not covered under 273 at all. That means we cannot go to commission for waiver at all. So I was just thinking, look at, then you have to see section 278E presumption under prosecution. In the case of Gala, that is 288 ITR 225, the 278 provision was challenged. They said that no, nothing doing. You have to prove it. If that is the case, think an SSE, penalty levied, confirmed by the tribunal, and tomorrow department launches prosecution. Where he will stand? He must have repaid the money, everything. So if this is the case, possibly I think at least on this, where a deemed fiction is concerned, they should not levy the penalty at all. If some further addition is there, one can understand. This will have the lot of repercussion. So with this, thank you very much, given opportunity. And in fact, I must thank Mr. Rahul and his team, because my office was studying in detail, and that it took a lot of time for us to study. And with this, I think my 15 minutes presentation is over. As further question, I can answer the question. Thank you.
Thank you, Dr. K. Shriram, for the valuable insight on the subject constitutional validity of amendments to Section 115 BDE. Our next speaker for the evening is Dr. C.A. Pradip Kapasi. He is leading the chartered accountancy firm Pradip Kapasi and Company, a prestigious firm located at Mumbai. He is a chartered accountant and a law graduate from Government Law College. He has been a past president of two leading professional organizations, the Bombay Chartered Accountants Society and the Chamber of Tax Consultants. He has addressed many conferences, seminars for professionals, tax officials, and trade associations across the country on the subject of direct tax laws, stamp duty, and allied laws, and also received several awards for his professional contribution. He is regular contributor of articles in professional magazines and various prominent publications. He is also known for his philanthropic activities. He and his team has contributed to the society through an initiative named Prayas by collecting and distributing old clothes to winter women's drive in tribal areas of Maharashtra, collecting and supplying necessities for Uttarakhand relief, distribution of food grains to needy, etc. Friends, I request Honorable past President Mr. Kishore Banjara to do the honors of presenting a small token of appreciation to C.A. Pradip Kapasi on behalf of the Chamber. I invite C. Pradip Kapasi to share his valuable insight on the subject, Pradhan Mantri Garib Kalyan Yojana.
President Hitesh Shah, my co-speakers, my seniors, ladies and gentlemen. It's my pleasure to stand before you and to share some of the thoughts on this Pradhan Mantri Garib Kalyan Yojana. The first thought which comes to anybody's mind is that whether this Garib, which is standing in between Pradhan Mantri and the Kalyan Yojana, is it appropriate or not? The man who has been very used to wearing, say, expensive suits, should he be accompanied by or followed by Garib is something which it simply is, that it doesn't rhyme well. There is nothing, I have to comment on. This is. And the other thing is that unlike my very worthy and illustrious co-speakers in the earlier two ones, senior advocates, I would not be raising any questions. My job will be limited to, introducing the scheme. It's not that, it simply is my inability to raise questions. I don't sense questions and therefore I don't raise questions. And I would leave it to the panelists, the moderator, to raise few questions and let's see, whether one can take those questions or not. With this limited aspect, yes, that the job, as I said, is to introduce this Yojana. And while I sat about to prepare for this presentation, or introduction, I thought that what am I getting into it, and what are the possibilities which one would have, see, before one can even think of getting into this PMGKY, or I would simply say Kalyan Yojana. Before one think of it is what are the different possibilities. Let's first understand and then only jump into it. The first possibility which I thought was that I am a person who is in receipt of a cash which has been accumulated before by me and which has been received on or before 8/11/2016. And the source is known source of income. That's why KSY, that is out of a known source of income. So I would be looking for a solution which would be materially different than something which we are discussing today. Then, I have received cash on or after 9/11. And I happen to be a person who is an authorized person. AP stands for authorized persons. That I am authorized to receive it and therefore, what would be my implication in my hands. Then I am a person who has received it post 8/11, 9/11 onwards. And I am not authorized to receive it. And then Mr. Sridharan has in detail explained to us that whether it is possible for me to receive such a cash or not. And for a change, I happen to hold a little contrary view than what has been canvassed, that whether I can receive if I am not authorized person. So that is yet another category. He is very right that you need to examine the income tax implications in relation to that. And what would be the income tax implications? Perhaps, there are a few questions relating to that. Time permitting, we will examine that also. Then, there is once again this thing that I receive it on or before, but my source is unknown. I would not be able to explain or establish with evidences my source. But I have received these high denomination currency notes prior to or up to 8/11/2016. Then there could be a situation which Dr. Shivram talked about, is that that I am in receipt of a cash which is in the form of high denomination currency note and which otherwise could be exposed to taxation under the amended or the sought to be amended the provisions of section 115 BBE. Then there could be a situation which I am seeking to cover myself in is the Pradhan Mantri Garib Kalyan Yojana, where under I am in possession of cash or I have deposited certain cash and I seek to cover myself under the new scheme. And there could still be a case that I am so adamant that I believe that that the government and the country would continue to function the way it has been functioning and I don't need to worry about it. So I simply don't do anything and a search happens. And that too I don't declare. And in such cases, what could be the case? And there could be a search and I am intelligent enough to admit my default and therefore declare it. These are the different situations. I am conscious that there could be such other situations also which you can surely figure it out. But right now I thought that this is the background which I will have to keep in mind, the background which you also will have to keep in mind while advising your clients or while addressing the issue which you are individually facing. The synopsis of the talk is that yes, there is an yojana which has been announced. There is the scheme and the objects and reasons have been announced. I believe that it will be followed by the rules, notifications, and also the deposit scheme. None of it has yet been announced, but is awaited. And there would be circulars, clarifications, and FAQs, because all of us have questions. Even there would be questions even before the schemes are announced, and there would be questions which will have to be addressed to in the form of FAQs, circulars, and other things, like what had happened in VDIS, like what had happened in the Kar Vivad Samadhan scheme, and what had happened recently in IDS 2016 too. I'll just take you through the things, to the extent permissible in a little quicker fashion. That this law has been introduced, which is a second amendment bill of 2016. It has been passed by Lok Sabha on 29/11. Rajya Sabha is yet to pass, and on passing, it will receive the assent of the President. As far as we are concerned, this scheme has been introduced not in the Income Tax Act of 1961, but it has been sought to be introduced by amending Finance Act 2016. By amending Finance Act 2016, that was the vehicle under which the IDS, that is Income Disclosure Scheme of 2016, was introduced. So it is that vehicle which continues to be used for the purposes of introducing this Kalyan Yojana 2. Several provisions have been introduced in the form of 199A to 199R. There are about 18 provisions which have been sought to be introduced in this Finance Act, which would be vital for the purposes of our understanding. Importantly, statement of objects and reasons are also accompanying these amendments which are sought to be made. Particularly paragraph 3 and 4 are important for us to understand the scope of this is, because as I pass through the scheme, it appears that there would be questions relating to the qualifying asset or the qualifying income in respect of which this scheme would be permitting a person to come forward. This para 3 says that that experts had recommended and made representation to the government, that is Ministry of Finance, that something must be done to the illicit conversion of the high denomination currency notes which circulation had ceased to be permitted, which had ceased to exist. That in respect of that, the people have been getting into the illicit mode of converting their currency into some other form of asset or in some other form of currency. There was an urgent need. And it was also felt by these experts that an opportunity should be provided by the government to come clean in respect of the currency which had been banned from 8th November 2016. So it is with this object the government, concurring with the so-called experts who had suggested this, had introduced this scheme for the benefit of stopping the conversion, this illicit conversion, and also giving an opportunity to those persons who had been suffering or who had come in a fix because of the ban on the high denomination currency. This is the object with which this has been introduced. Now eventually one will have to examine that whether this object has been kept track of or the scope is expanded beyond that. And if it is beyond that, personally I have nothing against that, but then one needs to appreciate that the scope is not limited to high denomination currency, but it travels to cases far beyond that. This scheme is primarily the funds which will be received under the scheme, as we will know that there will be a requirement of depositing a certain percentage into the scheme for Garib Kalyan Yojana. And that would be used for this irrigation, housing, toilets, infrastructure, primary education, health, livelihood, justice and equity. And it's good to know that, yes, that even while you are dealing with an unjust issue, say you can still do some justice by depositing into the coffers of the government. Next, yeah. So then there are certain terms which have been defined. A declarant has been defined. Income Tax Act, wherever there is a reference, it would mean Income Tax Act of 1961. All those terms which have not been defined under the scheme, under the Yojana, would be and those are available in Income Tax Act, would be understood within the meaning permitted under the Income Tax Act of 1961. Importantly, the whole scheme, the whole Yojana is about income or perhaps undisclosed income. These both the terms are interchanged. Whenever it suited, government has used undisclosed income, some places it has used income. But everything which is talked about is with reference to this income and undisclosed income. That's the way I would like to believe. But none of these terms are defined anywhere under this. This is not unusual for the reason that even under income disclosure scheme, these two terms were not defined. And one were called upon to take his own view in respect of these terms. The issues under IDS were far greater when it came to understanding the concept of income. The issue under this Yojana, to my extent, would be little lesser as compared to the other one. The commencement and closure, the government has not yet announced. The central government is authorized to notify the date of commencement of the scheme, and it will is also authorized to notify the date of closure of the scheme. The act, that is Finance Act, in this as far as this Yojana is concerned, that will continue till such time the act is repealed. But as far as the operation of scheme is concerned, the dates will be notified by the central government. The time for making declaration, the time for payment of taxes, the time for deposits, all that would be notified, I would understand. And the scheme perhaps would provide for the form, the manner of declaration, the manner of asset which is to be declared. It doesn't presently provide for passing of an order by the principal commissioner or the other commissioner. It doesn't provide for rejection. It doesn't provide for revision of a form which has been filed. And immunities are very, very vaguely provided, and perhaps I think that something may be there in the scheme as regards the immunities also. The charge of tax is by 199. D and E read with C is that, in respect of the undisclosed income, in the form of cash or the deposits with certain banks, that is specified entities, a tax of 30% flat would be levied in respect of this. In addition, there would be a surcharge at the rate of 33% of 30%, that would be about 39.50 or 40%. And in addition, 10% of the undisclosed income would be taken from you by way of a penalty for getting into the scheme. So walking into the scheme has a cost which is about 49 point some percent, and rounded it off to 50%. That is the cost for getting into the scheme. In addition, there is also a precondition that you would be required to deposit 25% or more. You would be required to deposit 25% or more of this cash or the deposits which you are declaring into a specified deposit scheme for a period of 4 years and would not carry an interest. So this deposit in an interest-free deposit is also a precondition, and therefore I would consider it to also be a condition and a charge in respect of the declaration which you are making. This overrides, the charge would override the provisions of the Finance Act and also the Income Tax Act. So whatever we have understood in the context of 115 BBE or under the Finance Act, the respective rates for advance tax, TDS, all that would not be material for the purposes of this scheme, operation of this scheme. Yeah, next please. Yeah. The payment and refund generally is, unlike IDS, you do not have the facility of paying taxes only after filing the form, only after the commissioner passes an order accepting your IDS form, and thereafter you pay the taxes. And as a favor to the persons who have been declaring who have declared under IDS, you have now been given a long time of payment up to 30th September 2017. Unlike that position, as far as this scheme is concerned, you are required to pay taxes upfront, and that upfront would mean that you need to pay it before even you get into the scheme by filing a declaration. Not only that, you need to pay taxes, you need to pay surcharge, you need to pay penalty, and also ensure that the deposit of 25% or more is made before a declaration has been filed. So this is one of the preconditions for a valid declaration, that the payment be made and be made beforehand, before a declaration has been filed. This, as regards the deposit is concerned, we are reasonably clear that yes, that we need to deposit this 25% or more. It is something I believe that it would be 25%, but the government for some reason has stated that it could be more also. But you need to deposit this 25% for a period 25